Hello, everybody, and welcome to today's webinar. Today, we're diving into a very exciting and very relevant and timely topic, financial stress to financial strength, or so we hope, data-driven wellness strategies that really deliver ROIs. This session is eligible for HRCI, SHRM, and ATD professional development credit. I am Heidi Grecsek. I'm a managing director at the Brandon Hall Group. I have been in industry for almost 30 years, leading business strategy, leading marketing organizations, working with HR, delivering corporate strategies, and I'm very excited to be able to bring this timely subject to you today. Really quick, before we dive into financial wellness and really financial wellness, how it relates to corporations and companies and how things are changing and things you can do to improve that, let me tell you a little bit about the Brandon Hall Group. If you don't know, there's some incredible opportunities that could accelerate your career. Brandon Hall Group is a leading professional development firm that has been serving learning, talent, and HR executives worldwide for more than 30 years. We've advanced the growth and performance of millions of employees and leaders through our cloud-based platform, delivering evidence-based research, data, and certification programs that empower organizations to achieve excellence in every area of human capital management. Our impact spans more than 10 million employees and executives globally, supported by our comprehensive research library, strategic insights, and prestigious awards program. Below is a sample of the organizations we are proud to partner with. We have an incredible learning and network opportunities. In particular, two that are coming up quick are two BRIC events that are happening, AI Summit, October 15th, and our Leadership Summit on November 17th and 18th. And don't forget, a lot of people know us for this. It's a very fun time. Our next Excellence Conference is happening 2027, January 26th through the 28th. All details for everything I've mentioned will be available in a PDF you'll receive within 24 hours after this webinar. Okay, so just to get the ball rolling, we're going to do a quick poll question. So mark what you would like to know more about. The Eminence program, which we didn't talk a lot about, but it's basically a customized program designed just for your organization that can help drive awareness and collaboration between our two organizations. Our awards program that we're probably the most known for, if you will, and a lot of those awards are hand-delivered at the Excellence Conference, which is coming up at the beginning of next year, or more information about our BRIC Summits happening in South Florida in the coming months. Okay, thank you. So that was great. I'm going to give it a second or two, but largely pretty even split between Eminence program, awards program, and the BRIC Summit. So thank you for your results. I appreciate that. We keep track of that carefully. Also, at the end or during the event, there's going to be a chat and a Q&A. You can use either one. Please put your questions, comments, anything you want here that you would like answers or would like to comment on. We will try to get to them during or after this presentation. If we cannot, we will certainly get back to you by email later and make sure everybody's questions are answered. At the end, there will be a raffle. The raffle is going to be, Ivy, can you talk about the raffle?
Yes, of course. One lucky winner will be able to win an Excellence in Action program submission, but you must stay till the end and see if you're the lucky winner.
Thank you, Ivy. Okay, so let's dive into financial wellness. This is really becoming a hot topic for a lot of people because employers are investing a ton of money in benefits, wellness initiatives, and they're really starting to see that employees appreciate these. They come to work for them. They come to work for companies because of them. There's all different type of benefits that they're considering, but financial wellness is one that is growing because they're finding that the impact that this has it even can outweigh many of the other ones. So we're going to talk a little bit about that and how things are happening today and what the impact is. And some of the impact, the productivity, the engagement, the retention, overall workforce performance. And we're going to discuss the realities of what leaders and HR leaders are really facing today because of it. But then probably even more importantly, what are some leading organizations doing to turn this around and improve this and get better and actually make it a strategic business advantage. And because of that, we'll show what you can look at and counter to see what is it really working, how can we pivot and do better, and what is that ROI, and be able to explain that clearly to your executive stakeholders. Okay, so just to start kind of from the beginning, why this matters now. You know, I did take this from someone else. I won't take credit for it, but somebody said to me once, it's almost like carbon monoxide poisoning. You can't see it, smell it, know that it's there, but it's poisoning you. Financial stress operates silently inside of many organizations, and more. I don't think there's anybody that you would talk to that wouldn't say, you know, things are more expensive, things are harder. Everybody has different financial requirements, whether you're dealing with an older person, whether you're dealing with student loans, whether you know, there's a whole million different things that could happen. But it's personal to the employee, right? But the cost to companies is measurable. Financial stress behaves that way. It doesn't appear on a workforce dashboard, but it can weaken the organization significantly over time. It really should be included as part of the workforce infrastructure, in conversations, in benefits, productivity, as you decide what your benefits package looks like. It really should be a key part of that, a pillar inside of that that's paid attention to, strategized around, and actioned on. However, education alone is insufficient. So what we found is a lot of plans provide flyers, brochures, websites, emails, but honestly, things change all the time. So that once a year behavior that a lot of companies are still doing is just not really working anymore. They really need them all year long when these events happen, and really personalized. So whether they need to build emergency savings, help manage debt, better understand the benefits that are offered, plan for retirement that they weren't doing before, they may not decide to do all of these things in November of every year. So it really, it needs to be practical, timely, and at their fingertips all the time. And then also, sorry, thank you, Ivy. We must think about measures that really connect activity to outcomes. So are they really taking those activities to make things better? So we're going to talk later about leading indicators and lagging indicators. Some of those, like leading, maybe participation in the program, you know, is very clearly measurable. But then later you'll be able to see hopefully improvements in absenteeism, retention, hardship withdrawals. Are they ready for retirement, and even productivity? Okay, so poll question 2. What % of your workforce do you think stresses about financial pressures at least a few times a week at work? 10%? 40%? 70%? Or pretty much everybody? We're at a 90. I'll give you a second. So surprising, actually, the results are showing out of the gate, 70 and 90 were the biggest ones, but 40 started to build a little bit. There's nobody that says 10. So I think that really shows you how relevant this conversation is, and we should pay attention to it. Financial stress is no longer a private concern that remains outside of work. I'm going to read the quote, but then I'm going to make a couple comments. It's a workforce performance risk that affects focus, attendance, retention, healthcare utilization, which we should talk about, retirement readiness, and trust in the employee value proposition. So it normally is a very private thing, but people are more and more looking towards organizations to help them with their financial stresses and how to best manage them and how to leverage their pay and their benefits to help them get into a better place. Okay, so let's talk about what we're seeing when people really are dealing with significant amounts of financial stresses, and all different kinds of financial stresses for that matter. So obviously productivity, right? If you're stressing over how you're going to pay for your students' college or your elderly, you know, home that, you know, is getting very expensive all the time. You do that during work, you do that at home, you do that all the time. It's very distracting, and it weakens, and it causes a lot of issues at work. Attendance. Actually, this is very interesting. I did a lot of research on this. Brandon Hall has a lot as well. there is a lot of employees that over a 6 month period that miss work because of financial stress, things that they need to deal with or have to take care of, and the stress gets too high and they start missing work. And they will tell you that in many cases. So the numbers are all over the place, but they're pretty high. They're pretty high. Retention, financial stress, and insufficient savings. If they're not in a good place, they may be searching for a new job, not because they dislike the job that they're in. And maybe they're a top performer, but if they are not able to have money set aside for emergency purposes and daily, and they're living paycheck to paycheck, they may be starting to look for another job. And that's certainly not something organizations want, as it costs a lot of money, as everybody knows, to change out employees. And then financial stress starts contributing to some of the other benefits, if you will, or costs to the organization, like like the healthcare. They're going to the doctor, they're seeking help for their stress and their anxiety. They're not sleeping as much. A lot of different things that can really domino effect, if you will, if it gets bad enough. Also, retirement readiness. This is something that is on the rise. From a lot of people are out there borrowing from their 401k plans. They're drawing down on these accounts that they need as they get older. And as they get older, their cost, in some cases, your costs will go down, but in other cases, healthcare is getting more expensive. Retirement communities are getting more expensive, and they're drawing on these accounts, and that's a big problem. Also, the trust part of it. So when employees need to have the ability to speak in a private space with their employees or their managers, if you will, they need to be able to feel like the trust is there to keep that confidential and to make it timely. So maybe they need to have that even on a one-on-one, a weekly or bi-weekly one-on-one. If the stress is bad and they need to discuss it with their managers, they should and need to be able to do that in a confidential environment. Okay. So now let's move on to where a lot of organizations are today, because things have changed. Like all this stuff I'm talking about has changed so quickly. The employee expectations are higher. The benefits across the board are becoming, as I mentioned earlier, much more significant. They are expected to have financial wellness built into these benefit plans, which a lot of times, maybe there was a 401k plan, but it wasn't really a financial wellness program. They expect more than just that 401k plan. It's showing up in attendance, productivity, engagement, healthcare use. So I think every organization, but a lot of organizations, healthcare costs, even when the corporation is funding a lot of it, the spend is going up for everybody. And part of it is because of financial strain. Technology environment is maturing. So platforms now, they're starting to combine. And this is a really important one that we haven't started talking about yet in this webinar. They really are, there's platforms out there that are excellent, that can really combine a lot of the different benefit and 401k plans and savings plans and workforce analytics and payroll all in one platform, so that you can figure out what the problem is, how to fix it, and how all these things tie together and can work together to make improvements. It's hard I'm going to talk about how you can show these indicators to your leadership team and how things are getting better. But it is hard. So, we do need to show that ROI all the time to the leadership team so they understand the importance of this. And that's not something that you just do overnight. It does take time and agreement with your leadership team on what those KPIs are. But they do exist, and we need to get stronger with them. But I'm going to talk more about that later. And then really important, this is probably the most important one, that if you're an HR leader or a CEO or anybody on the leadership team, things that it used to be, there was a lot of a one size fits all. Okay, you got your retirement program, you have your benefits program, and that better work for everybody. But it doesn't. It doesn't. There's different needs, and you really have to think about, and maybe inside of your organization, you have just a lot of frontline workers. But in a lot of organizations, there's a whole big variety around the world of people that need to see things in different languages, that are lower income or maybe really, really high income. Just because you're, maybe a senior director or a VP, that does not mean you don't have significant financial pressures. You may have more. So they expect these things to be personalized for them. Okay. So this is very important. I think there's some emerging technologies, which is great. With the power of AI, a power of investment, the power of growth, there are tools out there that HR and leaders and organizations should start thinking about. So I'll start at the top and go down. The rise of hyper personalization, because I just talked about that on the last slide. It needs to be, it can be AI driven, but the need to be able to say, okay, I fit this profile. Here are the issues that I'm dealing with. How can you help me? Should I be putting more of my paycheck automatically into a savings account? Should I be paying more down on my student loans? Because everybody has different needs. So the expectation is that they need to be personalized for that person. Contextual nudges, for example, like let's say an employee gets a bonus, a nudge from an AI bot or something that says, hey, you just earned a $10,000 bonus. Why don't you take 2,000 and pay down this debt or pay the rest of your retirement to completion? Different things like that. And that's the expectation. So, and talking about AI-driven co-pilots, it's being able to ask, just like we all, or most of us, I hope these days are asking AI, what should I do about this? Or what do you think about that? Or what is research showing? Similar, people want and expect to be able to go in to a confidential, that's very important, and think about that word for a second, a confidential AI pilot that they can ask things like, how does my recent promotion affect my student loan, payment plan? How should I handle that if I have all these other things? And the AI would know what their portfolio looks like because the technology now can enable that to be tied together, which is great. We talked already a little bit about global considerations. I think that's kind of hopefully an obvious one. If it's not and you have questions, I'm happy to go over it more. But obviously around the world, things are different, right? Healthcare programs are different. Government subsidies are different. So you really have to take that into account depending on where your organization is in the world and where the footprint sits. So embedded finance benefits really as a utility. So it's really financial services are becoming seamless byproduct of what software employees use daily. So kind of an executive summary is they expect these benefits and they expect these AI pilots, these confidential, this not once a year, but common to be available to them when they sit down at their desks or they're even at their front line and they're on their phone. They expect these things to be at their fingertips all the time, all year long, not just once. So they really needs to be embedded as much as possible into the tools that they are using every single day. And then finally, behavioral economics and choice architecture. So this is a really interesting one in that it is behavioral. So what they can do is put in smart defaults, if you will. So not just enrolling in your 401k plan, but saying if I get this paycheck, I want 5% to go here, 10% to go here. If I get this bonus, if I get this incentive, I'm going to set up different even pings for myself. Maybe it doesn't go automatically. Maybe I get a ping to say, hey, what do you think about using some of this money for X or Y? So that's really, it's an interesting thing. And it also accumulates a lot of information and data that a company can use when they see how people are behaving with some of this stuff, which is great. Again, in a confidential way. Okay, so what's the reality? So we've talked a lot about kind of where we are today, what you should really be watching out for and considering when you think about a new financial wellness platform or how to move to the next stage of your financial wellness in your organization. Again, just real quickly, because a lot of these that we've talked about, but financial stress is broad. It's very broad. We've talked about that a lot, but the needs are very specific. So I think I've driven that point home a lot. Reality two, this one we didn't really touch on a lot, but it was interesting that Brandon Hall research has shown that, believe it or not, liquidity is one of the first problems that people have. It's not a lot of the stuff that I talked about in some cases. It's literally people are, with the prices of things today, people are living day to day on their paychecks. So total liquidity is also often the first barrier, and it's becoming a problem, and it's becoming a bigger problem all the time. Reality three, before student loan support was not not really a huge, I mean, people had student loans, sure, but earlier in life they were paying them off, but now they're bigger. They're bigger than they ever were before. They're being paid off slower. And it's really becoming a problem. There are some government, again, depending on where you are in the globe, things coming that may help, but it's really also even becoming a retirement issue, like all combined. It's a problem. So reality four, we talked about the AI and the personalization, but that's something you can't just throw out there. You need to either design very, very carefully or work with an organization that's specialized to be sure that it's governed very carefully. This is private information, and people want to keep it private or they're not going to use it. And then we touched on this earlier. The market is moving towards integrated total wealth views. So I guess we didn't really talk about this one completely. People are expecting all the different parts of their checking account, their 401k, their savings account, their student loan, their car payment, whatever that is, like all those things, their paycheck, their benefits, all to be tied together. That's really what they would really like to see and are starting to expect in this day and age. Okay, so what can you do about it? So I don't know exactly where everybody is in their financial wellness in their organization, but one of the operating models that we've seen work really well for leading organizations that have seen big impact for this have followed an operating model like this one. First thing is diagnose what the biggest issues are, for example, and how are you going to do that? I'm just going to use an example because I'm not going to go through all these at length because of time, but you'll certainly get more information and can get it from the Brandon Hall group. But to diagnose, so let's say you're sensing there's an issue here. We all know there's an issue here in all organizations, but if it's an employee, they'll take a lot, surveys are tough these days, but usually if it's their company, they'll take a survey. You can look at your benefits utilization data in a second. EAP trends, absenteeism data, you have all that stuff in your platforms, I'm sure today. Retirement plan data, employee listening, and vendor reporting. So pile that together, see where you think the problem is. Where is the biggest problem? And then prioritize, because maybe you have a really big problem with student loan debt or something, but it's impossible to tackle. Maybe there's a second or third that you can tackle more quickly. So prioritize where you see the problems and biggest issues are. Design the program. So do you need some special technologies to help you manage? Is there something you can use internally? And then integrate that, because like we talked about earlier, the expectation is these systems are together and they're at the fingertips of the employees every day. So how are you going to integrate your design of your prioritized financial wellness issue? How are you going to integrate that into your systems? So then obviously you're going to activate that and you're going to very carefully measure that, which we're going to talk about next. So I'm going to slide by that one pretty quickly. And then hopefully, I think you'll find that normally the measurement is going to be a significant improvement. And then you can go back to the beginning and decide how you're going to scale that. What are you going to prioritize next? And you work your way through. Okay, so poll 3. What do you think would have the biggest impact on your organization if it was addressed properly? Emergency savings, which we talked about is really becoming a significantly bigger problem, honestly, than even I expected, is what the data is showing. Retirement guidance, healthcare savings, or student loan debt. Interesting. Okay, so it was pretty split between B, C, and D. I'll just quickly say for time. Not a lot in phase 1, which, like as I mentioned, was kind of a surprise for me as well. That it came out so significant in many organizations that this was a problem and a big financial stress for people. But you're not showing that, so that's okay. That's okay too. Thank you, Ivy. Okay, so this is important. So how are you going to show the impact of the changes that you're making to reduce some of these financial stresses and productivity on your organization? So leading indicators, you don't have to use all of these. You could use a variety of these, maybe some different ones fit for you, but just some obvious ones or things, hopefully, just to think about. Active engagement rate, right? Who's using the tools that you put forward? Who's implementing the action items that you put forward to fix your prioritized list? Are they using the advice that's leading him? A literacy lift. Do they understand more? Are they more clear? Are they using the AI to get answers and better understand whether they should be paying off this debt or that debt or whatever what what they're saving for maybe. Other leading time to action, hybrid, automated action adoption. So that means like when somebody decides on their own that they're going to put in some automated financial wellness triggers into their work stream and their paychecks. That's kind of a hybrid. If you see a lot of that happening, it doesn't necessarily mean your financial wellness is going to get better, but they're obviously really trying, and they care and they're using it, which is great. Lagging financial pietism. I mean that like not being there at the workplace, not really being so stressed over finances that their performance is starting to go down. Absenteeism, 401k loans and hardship withdrawals, that is a pretty easy thing to find. If that's slowing and you're seeing less of that, that's great. Retention and internal mobility is another lagging that you can look at and say, hey, you know what, we're retaining 10% more of our employees after we started this. So that's something that you can look at later to see if the system is working, as well as retirement readiness is an easy thing to look for. If you're seeing improvements there, that's a clear indicator that your program is most likely working if that's what you focused on. So again, you have to sort of decide which one is the right one for you. Okay, we are almost done. There's a lot more around this subject, certainly, that we can talk about, but I think all organizations, small, medium, and large, lots of frontline workers or lots of, higher level managers, it doesn't matter. Careful consideration should be paid to this subject. It is an important part of the benefit package that needs to be considered. It really is a strategic lever for workforce resilience and organizational performance. And if you don't consider it, you may become behind in your competition. You may lose strong performers. You may lose top performers to organizations that are paying attention to this. That's really a bullet two. You'll see the improved benefits, the protected retirement readiness, and and the retention. Diagnose the workforce. So this one's really, really important. If you actually want to, we know the problem exists. The first thing you can do is really diagnose where your specific financial wellness problems are and which ones you want to prioritize, because it's going to be different for probably most organizations are going to be significant different. So diagnose it, prioritize it, decide with your leadership team which ones you want to pursue, integrate that into the solutions that your employees are using today, activate their behavior change, and measure it. I think that's really the key to this. I'm not just talking to you about financial wellness. I'm trying to help guide you on how you can actually make a change. And, I think I said this earlier, the organizations that move first will have a stronger bias for trust, a clearer link between well-being investment and business value. And it really is can be a significant business value proposition. Implementing a good, solid financial wellness program and review is important across the board. So with that.
Thank you, Heidi. I'm thrilled to share that Tina Roden has won our Complimentary Excellence in Action program submission raffle. Congratulations to Tina. We'll be reaching out shortly with more details.
Thank you. Thank you for joining us today. Have a great rest of your day. See you again soon.